G'day, we're live. This is Zenium Live, where we talk all things money, finance, and property. And I'm your host, Scotty North. And today, well, we're going to cut straight to it. But firstly, I'm going to welcome a couple of people that are watching. Thank you for all those that are watching live. If you see us anywhere, whether it's live or on the repeat, you can always type in the comments box below any questions or comments you got, and our team will get straight back to you. And of course, those listening on the Zenium Live podcast, available at all good podcast outlets. On there, you can't type in any comments box because there isn't one, but thanks very much for listening anyway. All right, today we're talking about this, the annual Property Investor Sentiment Survey from PIPA. So that's PIPA is the Property Investment Professionals of Australia, and that's what we're going to go have a bit of a dig into and a look through, and we'll pull that up on a bit bigger screen for you guys there. Now, this is something that PIPA do every year. They send it out to their database and get everyone else who they know to try and send to their database and get as many people as possible to answer the questions they have in the survey and the comments and really gets an idea of where people are looking to put their money in property for the next 12 months. And that's what it's all about, this survey. And realistically, it comes out with some pretty good data. So let's get straight into it. Okay. Now, that's the welcome. We can probably skip that because we're going to go straight into the actual data. But there is 786 investors that actually filled the survey out. So we're not talking 20 people. We're not talking 5,000. We're talking a decent number to get some sort of response on and averages of things. But so it's not small. It's not massive. It is what it is. Okay, here we go. So 62% of investors still believe it's a good time to invest. And well, why not? The market's going off like a firecracker. So why not I don't know if that's called investing or speculating, but either way, they're in there for the win. And so that they say that's down from 67% in 2020. So 62% is down 5% from last year. Not particularly sure. They're guessing as to why that might be due to high property prices or whatever, but still it's pretty much getting close to 2/3 of the people surveyed think it's a good time to invest. Regional coastal markets are in demand. So that is pushing, 46%, those two numbers there. So it's pretty much half that say that those markets are what they're looking at. More investors are considering selling, so 59%. It's still down from last year, which was 71%. So that's still a decent number that looking to sell over the next 12 months. And that could be perhaps someone more advanced in their portfolio or in their years even, and they're looking to sort of cash in while the market is buoyant. That's not at all unusual. And that's probably a good thing because there's plenty of people that want to buy. So it gets really difficult if there's no stock in the market for anyone to do anything. So selling is always helpful to buyers, right? So the Sunshine State offers the best investment prospects by a large margin. All right. So last year, Queensland was said it was 36% of people said they'd consider Queensland. And this year we're at 58%. So that's a decent number of people looking towards Queensland. And you got to remember that was at the time when Melbourne and Sydney were pretty much locked down and Queensland still wasn't. That's sort of perhaps changing now as Melbourne and Sydney, especially Sydney, is sort of unwinding. But we'll see. There's still a lot of activity in Queensland. And here we go. 92% are seeking out qualified advisors. All right. That's a good thing. It's not a bad thing at all. So property investors remain optimistic about the market, but fewer are looking to buy. As I said, 62% think it's a good time. So we got 62% yes, 21% unsure, and 17% no. So unsure, I don't know where they're going to fit, but 17% no, they're pretty certain that it's not a good time to invest. They're going to have their reasons. I'm not going to say they're wrong, but they could be a different stage to you, or they could be looking at different market indicators or whatever. That's totally fine. We got 35% investors looking to purchase property in the next 6 to 12 months, which is still down, but it's still, 1/3 of investors looking to do something in a fairly quick time period, right? I mean, property takes ages. So 6 to 12 months is kind of like now. The overwhelming majority are investment veterans is the term that PIPA has used here, and have purchased several properties in the past. 46% hold 2 properties or 2 to 4 properties, while another 20% hold 5 to 10 properties. Only 20% of investors only own 1 investment property. That's similar to 2020 results. Now, let's be clear on these figures because they're somewhat skewed. This is not indicative of the overall property investment market. The great majority of investors only own 1 property. If you look at the ATO statistics, these figures relate to the people who have responded to the survey, okay? So of the respondents, a decent portion hold 2 to 4 properties. So we're looking at 66% hold more than 2 properties, so 2/3. So that is a very different makeup to the average property investor that you'd see at on the ATO statistics who might have 1 property. Okay, so it's interesting that we've got to make that noticed in these data. Of first-time purchases, 81% purchase an existing property and 19% purchase new or off the plan. No one said they purchased vacant land. Well, everyone, if you're doing a new house and land, you purchase vacant land, then build on it. So I guess they mean land that you just hold, right? Rent investor. Okay, first-time investors, 37% identified as renting elsewhere, while the remaining 63% owned the home they lived in. So 37% are rent investors or rent vestors. And that's about it. Next page. What type of property would they buy? Okay, so 68% say they're going to buy a house. 5% townhouse and villa, 5% unit apartment, 6% house and land, 5% unsure. Well, house and land package is a house. So depends which way you want to look at that data. That's saying that there's only 6% look at house and land packages, or we're saying 74% of people in this survey look at buying buying houses, right? As opposed to apartments or townhouses. 5% unsure. I don't know what they're unsure about. There's not too many things left to buy there. Buy a Macca's or something. 35%, as I said, next 6 to 12 months. 49% no, 16% unsure. Okay, investors remain open to move to other locations. Okay, has COVID-19 and strong market conditions made it more or less likely that you would buy a property within the next 12 months? 38% said more likely, 29% said less likely, 33% said unsure. Those guys are just waiting on a deal, so they'd probably buy if the right deal came along, which is pretty cool. 43% of the investors surveyed said their property investment or portfolio is in positive cash flow territory. That's pretty good. I guess it helps with loan interest rates so low. Has the pandemic made you consider moving to another location? 21% yes, 79% said no. So there's still a great portion of people there that are staying where they are. Now, that's an interesting question because this is a property investor sentiment survey, right? If you're looking to move to another location, you're talking about principal place of residence. So I think that that's either a question they threw in there just to get the data, or that's something that's in there for no particular reason, right? But I like that information. So we're looking at 20-odd% of people that would consider moving to another location due to whatever situation. And we're seeing that. And it doesn't take a huge number of people to move from Sydney or Melbourne, New South Wales or Victoria to either Perth or Queensland, and you start to put massive pressures on the numbers of properties in those areas. G'day, Michael. Thanks for stopping by. It's always good to have you on here. All right, so regional locations are likely to continue to benefit from plenty of new residents. Regional New South Wales is 21% are looking to migrate, indicating that they would look at migrating there. 22% Brisbane, Queensland, regional 17, etc., etc. So for the investors with negative cash flow, so the other 57% of people more than 60% of them said that they believe it will become positive geared within the next 5 years. So there you go. Everyone's living on hope, and perhaps that will actually happen. Rents keep going up. It will. All right. This is a good one. What's currently the biggest concern for you as a property investor? 9% is coronavirus and lockdowns. 16% a big correction in property prices. 12% Australian economic conditions. 6% job security. So that's a really low number for job security. Now, I'm not going to read into why we think that may or may not be the case, but job security at 6%, that's low, right? That's a low number of people who are concerned about that. Maybe that's because the government was paying everyone, or maybe that's because everyone's buoyant and hopeful. I don't know, but that's an interesting number nonetheless. 8% are only 8% are concerned about falling rental yields. 34% gaining access to lending. That's actually a fairly, accurate indication. I think that's a fair concern to have. 7% long periods of vacancy. I think that number is way too high unless you're buying in no man's land, because at the moment in most of these hot areas there is just no vacancies. 4% oversupply of new property. It's a bit sort of similar to the question before, the rental vacancies. And 7% ripped off by a property spruiker. Well, there you go. Yep. I think 100% of people should be concerned about being ripped off by a property spruiker. But perhaps if you don't go through those guys, then that's not a concern at all. All right. Queensland has soared to the number one location by a significant margin, with Victoria a distant third. Well, okay, that's fine. I'm not sure what they mean there, because on the little map here, we've got 54% Brisbane, 13% Sydney, and 12% Melbourne. This is for which state capital do you believe currently offers the best investment prospects? 1% in Darwin, probably doesn't really change that much in Darwin. 3% in Hobart, perhaps that's similar all the time. Perth and Adelaide probably change around a little bit, but the big three are the ones that are going to get mixed up all the time. Brisbane, Sydney, Melbourne are going to have that dynamic changing on a regular basis. All right, we've got a comment here. Mike saying work from home is going to change people's living situation for the next few years. People could move to another area and put a lot of pressures, as you said. Yeah, that's right. So the rise of Zoom as means that people can just, sit in their studies and do their work or whatever, and then they can wake up in the morning and walk down the beach or go out to the farm or whatever. Then they don't need to be in the capital city or the surrounding areas. Then they don't have to be, and they won't be. And that coupled with a couple of things there, like, I don't know, we will touch on that, and maybe we'll have a futurist show before the end of the year or maybe early next year, because there's a lot of stuff coming around with like automated drone taxis. They're announcing for the Olympics in Brisbane, things like that, which has a big effect on, I believe, the property markets moving forward. All right, so we've covered this one here. Where is the most appealing place right now? Regional markets, 25%. Metropolitan markets, 49%. 21% coastal locations and 1% mining towns. Okay, so 7 people said mining towns in the survey. There you go. Well, mining towns, if you're familiar with it and it's what you do, then you can read those tea leaves and go there. But that's an interesting answer. Property prices are set to keep rising. Okay, so I'm assuming that means that this is what people think, because unless PIPA knows something that I don't, that property prices, you're sort of guessing where they're going. I think they'll keep rising, but to say it's set to keep rising, let's see what they have to say here. The number of investors looking to buy existing stock continues to be high at 85% of respondents. Number of investors looking at house and land package is 8%, from 5% last year, blah, blah, blah. Okay, so when asked where property prices are heading in the next 12 months in their home state or territory, a staggering 76% said that they were going to get better. I'm assuming they mean more. Now, if you ask a first home buyer who has not yet bought, is a property price getting better, higher or lower, they're going to say lower. But if as soon as you own a home, as soon as that first homeowner or anyone buys a house, then what happens if property prices get better? They mean higher. So it's a very interesting dynamic. It's a bit like someone saying to you can you go and turn the air conditioner in the room down a little bit, please? And you go, okay. Do I turn it down as in, do I crank it up? Do I turn the temperature down more, or do I turn the efficiency of the air conditioner, the operations down so it makes it warmer? Like, what does that mean? It's the same sort of thing with this, right? What is getting better? Well, it depends on which side of the fence you're looking at. So borderless investing continues to increase with popularity. Well, borderless living would be nice if we lived in a country that didn't have borders as well, which is interesting because I don't ever remember crossing a border till like the last, 18 months. I didn't even know they were there. 44% of investors looking to buy outside the state they live in. That's a smart move, especially if you're in some of the states that are in lockdown and what have you. And 54% of investors said they'll consider rent vesting, which is investing in one location, living in another, as a property investment strategy. And I think that's wise. Rent where you want, buy where you need to for your long-term growth. Okay, let's move on to here. Okay. Property investors continue to seek long-term capital gains. So 60% had said long-term capital gains, 28% long-term rental passive income. Here we go. I've got to scroll down because there's a big graph here. 2% short-term tax benefits, 3% short-term cash flow, 3% renovating for profit, and 4% short-term price growth. So only 4% of the market are going in for the short-term hit, and then 3% renovating for profit. Good on them. That's not a job that I can do very well, but some people do it very well and make good money. And 60% long-term growth. So these investors are still looking to acquire property and hold it for the long time. We've got Ashley and Donna here. Hey, Ashley, how you going? Thanks for stopping by. Okay, where are we up to here? Lending and the economy remain top concerns for investors. Well, realistically, that's probably two things they can be concerned about and probably not do a whole heap about. You can't necessarily change the economy, and you can't necessarily change banks' ideas. You can make yourself look better for going to a bank, but there's a couple of concerns there which you can't do much about. Do you currently find yourself in a position where you're unable to refinance an amount which you were able to borrow previously? So this is an interesting question. I know I've got a couple of people watching here that would like this question. 22% said yes, 50% said no, 16% unsure, and 12% not applicable, which I'm assuming means they're either not wanting to borrow or they own outright. Okay, so we were assuming there. 16% unsure would be they haven't tried. Okay, so, those figures there, it's like a quarter of people are having issues where they didn't have issues before. Now, that's going to come a lot down to what industry you're in, what industry you were in during COVID, your bank statements, they're looking pretty deep into that sort of stuff now and what have you. And so it's really important to keep yourself squeaky clean. I was talking to someone the other day saying that, was it last year, they brought out the banks were able to data check your statements. And so when you're out with your mates on a Friday night at the pub, and if you're listening, I know who you're listening there, Mike, you should probably take this into consideration, is and your mate pays for your dinner because he's got his credit card with him, and then you send him $50, right? You don't send it as ICE payment or blow or something like that, right? Drugs, because as a joke, right? Because when you go and get to the bank and they put it through their system, those type of keywords, believe it or not, get highlighted, and they're going to start asking you some questions. Oh, what's this every Friday night? You're going out buying ice, are you? Oh, no, it's a joke with a mate. Oh, sure it is. Yeah, you look like someone who doesn't do that sort of thing. So yeah, all right. So you just got to be a bit careful about doing that stuff. All right, back to the main show here. What have we got here? What description best describes your current cash flow position? I have more money coming into the household right now than going out, 86%. I have more money going out than coming in, 14%. All right, so 14% probably need to do something about that. So, but that's interesting. All right, we got Ashley saying he's got to stop transferring funds around on the weekend with the wrong bank tag on it because that's going to cause him problems. Ashley, we'll have to come back on that. we need to have a look at those statements again, perhaps. All right. Investors keen to seek out the best deals. Well, that's good. So they should. And if they don't want to do that, we can do that for you. There you go. There's a plug. Just hit us up on the details below. hello@xenium.live, or call us 1300 66 7789 if you want any fantastic deals through our buying team or our building team or our developing team. You need to hit us up and do that. All right, 25% said they would consider refinancing their loan for an interest rate differential of just 0.5 percentage point. Now, that's an interesting thing, because if you're talking about you've got an existing 4% loan and you're going to refinance for 0.5 percentage point and it goes to 3.5%, well, that's a 25% interest rate change. So while we're talking 0.5 percentage point, it can actually be a substantial difference to the interest. Now, it still may actually end up being a huge amount each month, but if you're looking at it in the right percentage, it is a 25% reduction in loan rate. And so that's pretty important to know. 72% of investors said they secured their last investment loan through a broker, which is good. And here's these figures here. Did you secure your last investment loan directly from a bank? 17%. 4% were directly from a non-bank lender. So I'm assuming, PIPA here are just assuming, that's credit union, building society, specialist lender, because if you're talking hard money lenders or the guys on the Harleys down the shed, maybe they're not the best ones to go and get lending from. So hopefully it is a proper non-bank lender. 72% through a mortgage broker, 2% didn't take out a loan, and 1% other. They're definitely the guys borrowing from Harleys, and 4% not applicable. There we go. 72% of investors intended to finance their next investment property through a broker again. Okay, so not only did they intend to as well. Given the current interest rate you're paying, what interest rate differential would you consider refinancing your loan at? We touched on this. The greatest majority of 25% would be 0.5 percentage point. But in that area there, from anything from 1% to 0.25%, what do we got there? We have we got well over half of the people would refinance for 1% or less. That's a decent number. All right. So that's pretty good. Okay. Property investors seeking advice. Here we go. 35% of investors had sought the services of a qualified property investment advisor. I'm a QPIA. There is a handful of us in Queensland, probably none as good as yours truly, but, as long as you're talking to someone like that, specifically me, you'll do all right. So 45% said they'd use a buyer's agent advocate where they sought their investment advice from. Now, that's interesting because that could be good or it might not be good depending on how those people run their business. 51% qualified property investment advisor, 46% mortgage brokers, 44% accountant, 21% property educator and coach, 28% property manager, 25% financial planner, 19% real estate sales agent. Those 19% of people need to be careful, along with these 9% of people who talk to their family and friends for their education and information. All right, so that one is pretty straightforward. All I'm saying is talk to as many people as possible. Make sure you have a clue with what you're doing. Investors are seeking out qualified advisors. More than 80% of all investors believe that more education is needed around the risks and benefits of investing in property. Yes, I 100% agree. However, coming from someone who does that on a daily basis, at the end of the day, most people just want to be told what to do. So they might say, oh, we need more education, or we need more legislation, or we need this and that. So Scotty, which one should I buy? Where do I go? It's like, well, hang on, Tick, are you making this decision? Are you making a decision on your $500,000, or am I making a decision on your $500,000? It's still your money, right? So yes, I 100% agree with this. Yes, we do actually have services that provide for this as well. But you can lead a horse to water, as you know the saying goes. 60% of survey respondents said they were familiar with what PIPA does. That's great. 73% said a QPIA qualification would influence their decision to work with a particular property investment professional, which is good. That's okay. We have got all that accreditations there. 27% said, no, that's fine. Don't want to work with you guys anyway, right? That's fine. 68% that's fine. It's an advocacy group. All right. And there we go. That's the final rundown. It was 786 investors in August 2021. As I said, it was in that lockdown time, so perhaps that could adjust their mindset of looking to other states. But other than that, that's some pretty good data there. Now, this here, I'll put this full screen and make it a little bit bigger so you guys can see where we're going here. Okay, so you can get this full survey off here. Go to www.pipa.asn.au because it's an association. So pipa.asn.au for this. And I read out of this stuff for you guys watching, for the guys listening on the podcast while they're driving, okay? Because obviously they can't see anything. So in case why does he keep reading everything on the screen? Oh, that's why. So go on to, and you can get a copy of that and go on their mailing list if you want. But anyway, it comes out once a year. All right, that's probably about it from me and the Property Investment Professionals Survey. Thanks for those guys that are there asking the questions and the comments in there. This will be available to obviously rewatch again. If you've got any questions or you want some strategy sessions or what have you, hit us up on the details that's been scrolling on the screen. You can call us 1300 66 7789. You can email us at hello@xenium.live. And of course, you can always put a comment in the comments box on anywhere where you see this video live or on replay. Doesn't make a difference. Our team will contact you and let me know that you want to have a chat. All right, that was a pretty quick one. I wanted to go through that. I've been wanting to do that for about 4 or 6 weeks now. I just need to find the time to break that down for you guys. Any more information on that, hit us up. And that's it from me. Until next week, we've got a pretty good special guest on Xenium Live. You're not going to want to miss that one. And I'll see you then. All right, this has been Scotty North, where we talk all things money, finance, and property on Xenium Live.